I'm going to show you a very simple setup. And a warm welcome to one and all. For those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. And each day I'm asked for various strategies and one thing and another. And through my time of being a trader, I've tried them all. I really have. And the simplest strategies are the ones that are pretty much price action driven. Levels and the price itself. But today I thought I'd show you a moving average system. The thing with these is I saw it the other day and it came up saying this is 100% accurate. Nothing is 100% accurate. But there is some merit in it because all strategies are very similar in the way they're put together. And then it's just what you feel comfortable with. Personally, myself, I am very level driven. Most people who follow me, and certainly the guys in the Scruffy Squad, will tell you that I pace, put my teeth back in. I haven't had enough coffee. And we all know Scruffy likes a coffee, so we better get another one. I place a lot of emphasis on levels and getting my levels right. Because if I've got that right, that's half the battle. So what I'm going to do is I'm going to pull up the DAX, which is kind of my favorite go-to market. Why? Because it moves constantly. And throughout the day, you've always got a good opportunity with it. So what I'm going to do is I'm going to look at it on an hourly chart and trade it on a lower time frame. And I do recommend you do this. If you're just looking at 5-minute charts and think that's the way you go, you might hit the crest of a wave a few times, but you're going to hit the beach eventually. So let's have a look at it. It's a quick and easy video today. Winky's out with the grandkids, so the house is pretty quiet. And I just wanted to show you something where I had a little bit of time. So let's have a little look. Okay. What can we see here? You can see the price is boxed between two levels. And there's another level down here. Now my belief at the moment is that this is going to the downside. But how do you get a bias of downside, and where would that come from? Okay. So the first thing I would do in this situation, and this is about as simple a strategy as you're going to get, guys. It's two moving averages. You use a 20 and a 10. All right. This is the way that it was shown on the channel I was looking at the other day. But that was it. It was just this. And what you supposedly were doing was getting in on the cross of these two. Now that's fine, but moving average crosses historically are not particularly profitable. So can we add something to this to make it a little bit better, a little bit more structured? Well, we can. That's why you add an oscillator on. Now we'll just use a basic one. Use a standard setting RSI. Why? Because everybody looks in RSI. You could use a stochastic. There's no real rhyme or reason as to why you couldn't. And what's this telling you? Well, it's telling you you're coming from the overbought, which is up here. That lines up. And it did it here, and it did kind of sell off. But they are against each other. All right. Because the blue at this point is telling you it's going up, whereas the RSI tells you it's going down. You want the two to kind of align. So in this case, there's the blue which is the faster one, shown as short, and this is working its way down. Now RSIs do that, they'll work the way down. Now the next part of the puzzle is the level. So there's your level. We put one in here, and it's respected it a number of occasions. It's gone up, it's now testing the moving average on the hour. So happy days. Can we get a trade out of this? Well, we've now decided on an hour the bias is to the downside because we've got a cross of the moving averages. We also can see a move down on the RSI, in other words coming from this section moving down into this section. And if I put a 50 line in, just so you can see it, it's also trading below the 50 of the RSI. So there's a high probability this is coming to the downside. And we're sitting on a roadblock, so we need to break that roadblock. So I've made a decision. It is now coming up to 3:15 in the afternoon. The hourly is just starting, if you like. So for the next 45 minutes, I'm going to look to short this. All right. So if I drop it to a 5 minute, which is my preferred, I don't need that anymore because we've decided what we're doing. If we look at this, the two moving averages are aligned. In other words, the faster one is to the lower side. So we don't really need the 20 anymore. In fact, we don't even need any of them anymore, in fairness, so we can take them off. And we can say to ourselves, shall we candle count? Well, we can. 1, 2, 3, 4, 5. So if we look at the basis of these, so a little arrow sort of there. The candle count is really just to give you an idea of best fit. In other words, where's a good logical price to get in? Well, in order for me to trigger this order, it has to burst through the level and kind of work its way beyond these, which is good. So what we'll do is we'll just put a simple order in. Just move that down to there. Give it a reasonable target for a 5 minute chart. So on this, about 10-15 pips is adequate. And off we go to the races. Simple as that. And just leave it. Let it get on with it. If you are wrong and the price runs away from you, well, then the price runs away from you. But if you're right, it'll pick the order up, take it into target, and you'll pay it with very little pain. And then your stops, well, you put your stops where you feel comfortable. I like 2 structure points, and that's all I would do, is I would just look at 2 structure points above it. From the hourly chart, I would just put a risk in from there, because I genuinely look at risk and reward separately. I don't look at them together. One protects the account, the other pays the account, so they are analysed and worked out completely separate. All right. So I'll just let it run and I'll come back to you at the end. There you go. That was quick. But it's the beauty of looking at a higher time frame and trading on a smaller time frame. You might have to wait a long time to get your trade idea, shall we say, if you're looking at a 4-hour or an hourly chart. But once you've got that hourly chart, the rest of it is pretty simple once the decision's been made. And there's your proof in the pudding. Where we at? It is 15:22. So a couple of minutes. Could have even have held on if I wanted to, but 75 quid in a few minutes. I've got a oil trade running as well, which will pay me royally sometime today. Trading is that simple, guys. It really is. And I can't really make it any simpler than what you've just seen. But if you slow yourself down, think about it logically, you'll succeed. And all the systems that you see that are out there, they do work as long as you can recognize the conditions of the market and apply the right tool for the right job. Simple as that. But if you're stuck, by all means contact me. There's details of the Scruffy Squad below. And if you're looking for brokers or anything like that, there's some decent free links down there as well. So nice and easy one today, guys. Trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.